44.39. Support at 31, 24, 11, 44 even, and 43.92. Resistance on the upside at 49, 59, 67, 75, and 82. We'll pivot again, 44.39. Support 31, 24, 11, 44 even, 92. Resistance on the upside at 49, 59, 67, 75, and 82. And this is on the heels of FOMC minutes that were released yesterday, and the market kind of rallied off the news, and then coming back down here today with looks like the imminent invasion of there by Russians. Seems like the market is, I guess they're just waiting for the final yes. They've gone in before it tanks because they're pretty solid here considering it's everybody's saying that they're in. So I don't know. See what happens. All right, welcome to the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels that we gave out, so support and resistance, as well as the price action opportunities that might occur once the market paints the bars. Combination of both gives us opportunities to trade the market, get long or short, based on, like I said, the levels. And we figure on average probably about 4 to 5 trades in the course of a day on average. So obviously when there's more volatility, there's more opportunity. And also we have to be concerned with our stop when there's more volatility. Right now, I think 3 to 4 points is adequate, but if the market starts breaking down, especially if there's news that comes out to reaffirm the speculation that Russia is going into Ukraine, then that's going to create more of some more volatility in here. We have to be a little bit more careful and adjust to it. So that's what we have to do here on an everyday basis. You are being a trader, so you have to adjust to the market conditions, and the market conditions could vary. And nothing here is etched in stone, as you can imagine. So we have to adjust to the market conditions given what is before us on every given day. And also make sure you keep your stops in place because, like I said, if there's news that comes out about confirmation, like President Biden said, it is very high, the likelihood of a Russian invasion. He said yes, and it is in his sense that Putin will go through within a matter of days. So that's what he just said just a few minutes ago as the market comes down here to the 31 area. And if you look at the chat box area, you will see the levels that we printed out there for you. Market got down to 31.5 here. Maybe you jumped in there at 35 as a scale, and you're getting a nice little rotation here off of that opportunity. Right. Yeah. So nice little trade there. If you did jump in, remember we're not going to be perfect, so we scale in around the level. Depending on your risk tolerance, and everybody here has different risk tolerances. Your scaling in is adequate to keep us in the game and also to handle any slippage that might occur. So a combination of both gives us an opportunity to get in because we're not going to be perfect, like I said. So you did jump in there at 31 area, maybe you got in there at 32 or 31.5 or somewhere in that range. Hopefully you were able to take advantage of that trade. Now we're looking at the 24 area as a next support level. We're not going to be trading this level anymore just because it's a little bit riskier. Yeah. I understand. All right. All right, market went down there, tested our support level there at 31, bouncing off of it a little bit. Again, we are trying to find these areas of inflection that gives us an opportunity to make some money. Whether you're going long or short, how you handle, how you trade, how you get in, how you exit is a totally the it's just totally up to you as far as your risk tolerance is concerned. So not everybody here trades it the same way or would trade it the same way. So keep that in mind. If anybody has any questions, feel free to ask in the chat box area. All right. So we jump back up there to the 30, our pivot there, and coming off here a little bit. So nice little trade there if you were able to jump in, take advantage of that little opportunity. Again, we are trying to find areas of inflection, gives us a chance to scalp the market. We're looking for 3 to 4 points on our trades, off of our trades, and that's what we are trying to achieve here. So hopefully we're able to take advantage of that little trade down there. Again, we're looking for opportunities, these areas, and we give you our levels early in the morning, and then we kind of use them as the day goes on. That's what we try to do here on an everyday basis. And patience is important in this game. Obviously, you have to wait. Sometimes the market gets into a little tight little range, doesn't trying to figure out which way it wants to go next. Yesterday, obviously, because of the FOMC minutes that were going to be released late in the afternoon, the market wasn't really doing much, and then all of a sudden, it got the big move based on the fact that they were going to be trying to figure out what all of that stuff means. So, all right. So again, we're not going to touch the level here anymore. We're going to look for the next level below, which is a 24. If we go down there, I don't know which way we're going to go. Again, we don't try to predict which way the markets are going to move. Let's see if there's any numbers coming out this morning. And we'll talk about what the Fed said yesterday. So we already had the initial claims come out, and Bullard is speaking at 10 o'clock. And so he's been very vocal lately, and the market's been kind of moving on his words. So that's going to be out at 10 o'clock Chicago time. As the old adage, old support becomes resistance, and vice versa. Yes, I would say that they do sometimes. Again, dependent on how the price action. Sometimes it's a stronger adage than other times. Again, they're all based on how it reached it or it got to it, and how it traded off of it, and if it really became good support and held a few times, and then if it and then on the rotation off of it and come back to it, then you can try to determine whether it's going to be follow that adage, as you said. So yeah, sometimes it works and sometimes it doesn't, but I would say that dependent on how good the level worked prior to that will determine whether you can use that for that kind of setup again for yourself. All right, so we're kind of hanging here around this 31 area. Got down to 32 a couple times, bouncing off bonds here, kind of trying to figure out which way it wants to go after yesterday's. Well, they're up a point, so they're up pretty good after yesterday's. It kind of sold off a little bit prior to that. They really kind of just jumped around choppy after the news came out. So let's see. Again, we're just kind of hanging on the lows here. I think concerned about what could come out of the Russia situation. And the market's a little bit nervous here. So see what it wants to do. Again, we had a nice rotation there against our first level of support. Those of you who might have come in a little bit late, we're going to repeat the levels in the chat box area. If you bring up the chat, you will see the levels that we are using as a guide to the day. Again, those could be adjusted at any time. We could tweak those. We can add to them. We could, like I said, we didn't get to 31, but we got to 31 and change, and basically the level worked very nicely for us. And now we're just kind of bouncing off of our pivot up there and coming back down here. So it's a little range game. And if you are playing the pivot rotation, you're doing okay with that. So again, those are just there for a guide to the day. I think bond market is a little bit concerned about what's going on with the Russia situation. Easy for me to say, but not. And that's why you get this little rally here in the bond market, where it's nice little rally in that bond market as it's up a point plus the 30-year anyway. We came down here. We are testing this 31. If you are very, very aggressive, maybe you took it again. I would say it's a lot riskier. Looking at the 24 area as our next support level. Again, we are stuck here in this little bit of range. You can see how this 31 areas it's worked very well. And again, if you did jump in at the lower end, it's a lot very risky. The lower end of our entry point there, very risky, but did pay off. Again, there's a risk reward with everything that we do here. And either way, you have to keep your stops in place in regards to how you're going to trade levels, how you're going to trade areas. What we try to do in our education course is explain to you the opportunities, and we let you make those decisions as to why you would take that trade and how you would manage it once you get into it. All right. Don, we're going to go back to can you repeat the levels again? All right, thanks. Again, there are the levels for us. The next level on the downside we have is down, as you can see, down at the 24 area. As the market slowly down ticks there, whatever area we have or whatever opportunity you have, you're always going to keep your stops in place. As we come down here to the 24 area. So get down to 25 and rotate back up. You put in your order there at 25, you should have got filled in. Again, we're scaling in. So how you scale in is, again, we missed the 31 by a point. Well, actually, it was less than a point last time, but this time, hopefully, if you did jump in there at 25 on the top end of your scale, or even hopefully you were able to jump in there and take advantage of this little rotation. Again, be a little bit careful now. Kind of the same situation we had with the 31. It got down to 31 and change and rotated back up. So be a little bit careful here if you're going to trade the 24 area. Okay, there is the rotation down here. Obviously, you have to be a little bit careful here. We talked about maybe getting in at the lower end of the range, give you a little bit better entry point if you did jump in at all. You can see bond market kind of rallying here a little bit, maybe kind of hinting towards something. I don't know. Okay, if you got in at the lower end there, maybe you got in there at the 22, lower end of our entry point, you're getting a nice rotation here. We had to adjust there a little bit based on the price action, gave you a little better entry point against the level, and you're getting a nice rotation here off of that opportunity. So nice little trade there if you did jump in. So our levels have worked very nicely for us. Again, making adjustments, getting better entry points based on the price action, but always keeping your stops in place no matter what. We like the quick rotations here off of these levels. So nice little trade there if you did jump in. Again, bond market rallying. Again, bond market is keen to what's the happenings in Russia and Ukraine there. If I think if there's confirmation that they have gone in, I think you're going to get bond market is going to rally, and probably S&P is going to go to the downside. I'm just assuming. I don't know. Okay, I'm not telling you that that's going to happen. I'm just making an assumption that that could happen. A little flight to quality situation. All right, so let's see. The yield on the 10-year is right around the 2% area, even with a slow rotation here. So that's where they're kind of hanging there for a while. It's a good number to hang around. Next level on the downside we have is down all the way down at 11. That's the next support level that we have. Again, if you made a little bit of money this morning, you can pick your spots. You can maybe decrease your size. If you're happy with the amount of money that you've made this morning, you reach your goals. I mean, that's one of the things that you don't have to keep trading is the point. Even though markets are open till 3 o'clock, it doesn't mean that you have to, because futures trading is. One of the things, I mean, I think we get good ebbs and flows in the morning. That's why we like to trade the morning hours versus all day. I think you get yourself in trouble if you force yourself to trade all day. I think if you make your money and make your goals, whatever they are, there's no reason to be, because at any moment in time, the market could jump up and bite you. And then you're stuck here and you ruin a good day. So believe me, it's happened. I'm speaking from experience. So these things happen. All right, again, we've had nice couple rotations there off of our levels. Our next support level we have is down at 15, as the bond market here is definitely reacting to something and creating us our rotation here to the downside. If you're very, very aggressive, maybe you're getting a short here based on the movement in the bond market, but it's not. We needed a setup there for us to get short. We didn't get one, so we're just going to trade our support level there at the 11 area and see what happens. But either way, we are keeping your stops in place, no matter what, because if they do break out with something that's going to run through very fast. And you want to just make sure you have your stops in place. That way you don't get hurt. And we look for the next opportunity that the market will create for us. So you have to just keep an eye out on the happenings, right? I mean, that's the difference between trading. We're putting a program in or some kind of algorithm. Sometimes the algorithm doesn't take into consideration the volatility on any given day, right? And the news that comes out, unless you go in there and tweak it and adjust it, blah, blah, blah. But, that's usually not what a trader is not going to be able to adjust the program. At least not usually. All right, slowly drifting or quickly drifting, depending on what your tastes are right now and how you can, it is opening up here to the downside a little bit. So keep that. Just make sure you keep your stops in place, and you just never know when the markets are going to continue to break down or not, or rotate back up. We just never know. Just make sure you have your stops in place either way. All right, we'll come down here to the 11 area that we have. All right, there we go. Now we should, okay, now we got the 11 area. See what it wants to do now. Again, either way, you keep your stops in place. All right. All right. Nice little, again, we're almost to the point where we almost have to increase our stops because of the volatility here. But this is a nice quick 3 points off of that 11 area. All right. Nice little trade there. And just remember, the volatility has increased, so be careful. So we got down to 11. Nice rotation against the 11. Well, it got down to 8.5. So, but really didn't really stay down there that long. So hopefully you're able to jump in. Again, 3 to 4 points, and almost to the point, like I said, where we might have to increase our stops. And if you were looking for help in the bond market, since I said that, they kind of came off their high a little bit there. So maybe if you were getting in at that price there, you were able to get a little bit of feel good about it. Anyway, because the bonds all of a sudden just tick down a little bit and create a little push up here in the S&Ps. Now, again, we're getting a little inverse trade. Doesn't happen all the time. At least that's visible, right? And the bonds come here back up to the highs. So be careful now with this new whatever is injected into the market right now with this some kind of news that's coming out. Again, we're going to be the last ones, and you can imagine, like I said, what the news is all about. All right, again, just kind of testing the 11 area. Again, you see bonds here rotating to the downside. S&P's popping back up. Hey, Don, how's the weather down there, Texas? Heard you're getting a lot of nasty storms down there. Why don't you just hop in there instead of typing? Be easier for you, I think, if you feel like it. There you
All
are.
right. There I am.
How you doing?
I'm doing good. And yourself?
Okay, not too bad. I'm doing all right this morning, so we can't complain.
No, it's been a good morning so far.
Yes, it has been.
It's starting to rain a little bit. We're going to be in the high 70s today. Then it's going to trickle down into the 30s next day or so. Then back to 60, 70.
30s, that's cold for you, 30s.
I'm telling you.
No kidding.
I don't see how you can stand that cold weather up there. That just amazes me.
Yeah, well, that's what happens here in Chicago. But then you appreciate the 70s when we get them. So, it is what it is. Nothing wrong with that. All right, we're coming down here again. I think they're really trading off of this Russia situation more than anything else, because they did good with the FOMC yesterday in the afternoon. Rallied it all the way up. We had the 82 area there. If you were trading late in the afternoon, if I only knew to stay shorted all the day till today, I wouldn't even have to work today. Were you trading yesterday?
Yes, it was. I was short going into that 82. I'm going, come on.
You were short gain. You were short. Oh, well, then I waited for the 82. It's like the only one that I took. So,
and I was looking for, I think, 65, somewhere down in there. I didn't think we was ever going to get there. Yesterday I noticed something. Usually at 3:15, the market shuts down and it bobbles just a little bit, but then it kind of goes silent. Yesterday, this thing kept trading.
Mm-hmm. Yeah, well, they used to close it at 3:15 for half an hour, for 15 minutes.
Yeah.
And then reopen it again. They took that away. And so I think a lot of people are still used to closing down at 3:15. And so you have less volatility. And I think a lot of people just say, they just shut their computers off. So, but again, they all know that it's there. And if something happens or there's news or somebody, they all jump in there really quick and get involved again. So, yeah, it all depends.
Well, I'd never see. So the actual close is at 4 and not 3:15 anymore. They're still trading at 3:15.
Yeah, they changed the rules not too long ago. Right.
Oh, okay, I missed that.
Yeah. So they used to close from 3:15 to 3:30 and get all the orders in place. That gave it gave the pit a chance to see what their last orders are, see what they have to fill, because sometimes you get partial fills on some of the orders.
I take it they did this because of COVID. Then it just changed over to the screens and.
Yeah, they recently just changed that rule. They used to close at 3:15, and what it just gave the exchange and or the brokerage houses a chance to get everything set up to make sure they were good to go.
Yeah.
And if there was any miscalculation, somebody had it wrong, then there's a position on, somebody wanted to get out, you were able to get out in the next half hour. Yeah. So, and that sometimes that happens because if you're trading a lot, and look, it happened a lot because we did it manually. You had cards and you had people would add wrong. It happened to me plenty of time where not only did I add wrong, I had a clerk and she double checked my work, and if we both added wrong, and it happens, we're going to both, that we're going to have a mistake. And so you count up, you do everything manually again. Now it's a little bit easier. You're on a computer. A computer basically tells you what side you're on because it's right there on the screen. So
yeah,
the level is a 44 even level. What is the low? What did you put in 43?
For a second, I'll read.
43. Yeah. Let me give you some levels below, since we're rotating to the downside here. We got 92, then 82, and then 70, 75, 68, 57, and 47. I don't know which way we're going. I don't know if we're going to continue to go down or not, but those are levels here below. So 92, 82, 75, 68, 57, and 47.
Just a second, I'll get the new ones in here.
Yeah, take your time.
I'm not as fast as Mark.
Well, no, I mean, he's in California too, so.
Is that good or bad?
Well, I don't know. It's a question mark. I'm just pointing out facts. I don't know which way that goes, good or bad. That's a good question. Thanks for pointing that out, Bernard.
Control C. Is it supposed to be 44?
Yeah, 44 even, because we're trading 44 even now. You put down 11 and 43 even.
Oh, okay. Let me change it.
Yeah.
Yeah, when I start typing, no telling what I'm going to put in there.
Yeah, well, me too. That's why I don't do it. All right.
Try that one out.
There you go. Again, we don't know which way it's going. I don't know if those levels are needed or not. If the bonds rotate off here, it seems like we're definitely having some inverse trade. Bonds make a new high, we'll probably push down to the lows. I'm guessing, I don't know. All right, those are the levels, the new levels that we added onto the downside here. Again, the nervousness over Russia is overhanging the market, especially since the president was asked this morning about the situation, and he said that he thinks it's not over and that they're going to be coming in shortly. So that added to this push to the downside, added to the bonds rallying. Initially, the 730 number created a rotation to the upside. This little pop up here to 64 area was on the number, and then all of a sudden this is a rotation here in the bond market on the number. So yeah, they're a little bit nervous. See what it wants to do. Again, we are trading mini S&Ps. If you look at our chat box area, you will see the levels that we just put out, the additional levels that we just put out. But if you look at the first three support levels here, we had some nice rotations off of them. Again, if you just traded those and then trade anything else, you're doing okay. We had a couple of rotations against our pivot area there that could have maybe, if you wanted to, very aggressively gotten short. Again, there's other price action opportunities that are occurring, other entry points in addition to those levels. Could have gotten into the top end of the range, lower end of the ranges, depending on the way the market is trading. And again, any of the entry points are all dependent on your risk tolerance as an individual trader, not mine, not Don's. You have to find the equilibrium, the balance that makes you be able to put in trades and have confidence in it and feel good about it and recognize those trades. Recognition of the trades is important, and understanding why you're putting them in. That's what we try to do here as far as our education course is concerned. And obviously we have this trading room every day. The trading room is, I put it up because, well, when I came off the floor, I was a little bored up in my office. Definitely did not want to hear no Squawk Box. I'll tell you that much. I don't even know how and what, the why that's even, I don't know. I guess if you've never been on the floor and you hear somebody telling you, oh, 35 bids, that's 36, 400 offered at 37, 200 bid at 30. I mean, oh my God. No, no. I guess it was cool if people never heard it before, but me coming off the floor, look at a bond market break in, S&P is rallying. I don't know what's going on. Oh, there, something's going on. What time is it? It's 9:09. It's kind of weird. They both hiccup there for a second. Something's going on in the background. Yeah, so we're not a Squawk Box because I was up in my office. It was very boring. I was on the floor talking, even when things were slow, at least you could talk to the person next to you, but it was, kind of, it was very quiet up in my office. So I had put together this trading room here for traders who want to throw ideas at me and just communicate, chit chat. So keeps the trading, keeps us focused, keeps me focused anyway, right? I mean, sometimes you can, just kind of wander. Your mind wanders and trade wanders, and all of a sudden you got into a trade, you didn't realize it, and blah, 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 blah. So anyway, so that's why we started the room. And like I said, I don't know why anybody in the right mind would be listening to a Squawk Box, because that really doesn't give you too much information. Telling you what's been offered, you can look at I think you can look at the screen and see what's been offered. But hey, some people liked it. Who am I? Tell them not to. There was some talent to that too. Whoever was saying it.
There's real talent in being able to trade and talk at the same time. My hat's off to you, brother.
Oh, don't tell anybody.
Okay. I'll be talking and get to looking at that chart, and next thing I know, I'm quiet. I'm focusing here.
Like I said, when if I have a position, at least I know what everybody else has. Oh, I'm not everybody, but some people do, and I'm working to trade with you. So it's easier for me to just vocally say that than it is for me to say, oh, it's 15 bit. It just goes too fast now. We can't even. Squawk Box and talking when you're trading are two different things, I think, anyway, but that's me. Yeah, so that's where we're at. And it's just, I think the market's just nervous.
How's your weather doing?
Russia expelled the deputy U.S. ambassador. The State Department said in what the U.S. officials calls escalatory step. Escalating the situation here, like I said, he's waiting for, the deal was that he was going to wait for the Olympics to finish. So then do something, because he doesn't want his, I don't know. That's what the deal was. And it's coming up, I think, Saturday or in a couple days. So we'll see what happens from there. I think the market's I don't know what the market's going to do, but I would think the bonds really are they don't like war. That's not a good situation for them. It really throws a wrench into the Fed's dealings, how they're going to deal with that on top of what they're already having to deal with. The weather here. So it's very weird. We had yesterday started off at 24 degrees and got up to 30s by mid-afternoon. Then we were in the 50s last night and raining, and all the snow is gone. The rain just with this warm weather kind of melts everything. And right now we're back into the 30s. And at about 11 o'clock, we're expecting this big snowstorm. That's perfect Chicago weather for you.
Around here, it changes about every 3 days.
Yeah, we have 3 hours.
3 hours.
This is what's going on today. It's a kind of a goofy system that's kind of running through. The only good thing is that they're expecting a lot of the snow. I live in the northern part of Illinois, northern. If you're familiar with Illinois, there's Cook County, which is where Chicago is, and then Lake County, which is right above it, and then there's the Wisconsin border. So I am in Lake County, right on the border of Cook County, and there's about maybe, I don't know, 40 miles till the Wisconsin border. So right up on the top edge of Illinois there, and they're expecting a lot of the snow to go south into the city and into down there, like Indiana and Ohio. And kind of, I'm going to get a light under that snowstorm. So they're only expecting me to get 1 to 3 inches, which is a dusting for us these days. But in the city, 4 to 5, and less, south of that, 8 inches. So it's kind of a goofy kind of weather system that
how does snow compare? Like, if you get an inch of rain, how many inches of snow is that usually? Do you know?
Right. They say it's like a 1 inch of rain is equal to about 4 inches of 4 to 5 inches of snow.
Okay.
So that's what they.
If it snowed here, we'd be getting feet as much rain as we get.
Well, you got the heat coming from the Gulf there, so it keeps you warm. So
yeah, the Gulf waters are down to 50.
Yeah, well, we do have the lake here. The lake is at the 30. That's the problem. The lake is smaller, and I think it's like in the 30s right now. Even the lake is chilled. So, but then in the summertime, keeps us cool because the lake is. When you get the wind off the lake, it kind of keeps you a little bit cooler. Kind of weird, but all right. Let's see the stocks. A ruble extend losses as Russia expels U.S. ambassador. U.S. says invasion imminent. Yes, this is not looking good, this situation here.
And Putin's not going to invade just to make Biden look bad.
Oh, he's going to. He feels that he can because of Biden, actually. He thinks that Biden's not going to do anything. So, and he's just threatening the Europeans. I mean, what are you going to do? I mean, what are they going to do? I mean, I don't know. It's kind of tough to. It's kind of tough to figure out, what they're going to do. And Putin's got a love for Ukraine anyway. He's always had this thing about Ukraine. They say, I don't know. I'm just.
What's going to happen to the market if he does? Just going to crater?
I think they're going to. Yeah, I think they're going to sell it off big time, and wait for, and then. Again, uncertainty. Markets don't like uncertainty, but it's doing that right now a little bit. But it's doing it in a calmer way.
Yeah,
it's anticipating that. So half of this move is based on the fact that he is going to have a war. Then you'll get the second half when he does invade, but it's going to be a lot faster, and then the bond market's going to rally. And again, like I said, the bond market rallying puts a little dent into how the Fed is going to deal with everything. So it's going to be interesting. Don't know what's no, yeah, no idea what's going to happen. But yeah, I think they're going to. If he does it over the weekend, we open up on Monday, it'll be up a lot lower. But again, if he doesn't, he might go the other way. Because again, the market right now is anticipating something to happen. So if it doesn't happen, especially since they're expelling the U.S. ambassador, and they're probably, the U.S. is going to expel the Russian ambassador, it becomes, you're on the verge of something. If it doesn't happen, you're going to have the rotation the other way. So.
And like if like during Kuwait, did the bond market go up?
Oh yeah.
Hey,
Yeah, let me tell you. Uh, yeah, let me tell you a funny story about that. Yeah, well, that's going to be the problem there, Bernard. Is that how is he going to get all this money to take care of this war, right? Especially since they're not going to buy his oil, right? They're not going to buy Russian oil if he does something like that. So it becomes a little bit of a problem. So I'll tell you a funny story about that. Well, it's not a funny story. It's a story. It's a true story. So there was a big trader that was trading at night, and when the Kuwait War occurred, it happened. It started at night, and the bond market, the futures markets were open. This was before computers and 24-hour trading and blah blah blah, and fast internet access. So you're talking, the infancy of 24-hour trading like we have now. The markets used to open at 7:20, close at 4 o'clock, let's say. And so you basically, that was it. And then if something happened or occurred overnight, the reaction would be dealt with in the morning. So as the bond market here, as we continue to support level is down at the even area. So so the exchange wanted to go towards 24-hour trading. And remember, this is before they had 24-hour trading. So how did it start? They started trading at night, and you used to start. They used to close at 2 o'clock, 3 o'clock, and then when the S&P's closed, and then they used to open again at 6, and they go till about 10, and they kind of try to keep some kind of trading after hours. So the Kuwait War was started when there was night trading, and the bond market and S&Ps here continued to downtick as the bonds are on their highs. There's definitely a little correlation here going on between bonds and S&Ps. Bond market, which is a chart all the way on the left, and we are getting flight to quality here based on this war situation that might occur. To go back to the story here. So the Kuwait War started at night, and there was a big trader trading that night, and he always traded at night, I should say. I went there a few times to trade at night. Once, a couple times, because I had a position on unbeknownst to me. When I got a call from my firm saying that I had a position on, I counted wrong. This goes back to a story where I said, you're king, or you're adding and subtracting. And even though I had a clerk, and she and I was doing the math, and she was doing the math, and somehow we still messed up, right? Don't ask me how, what, why, whatever, but it happens. So we both, so I had a position on, and of course, so I had to go, and I went. Now, why did I go all the way downtown? Because that day it just so happened that the market was limit up, and I was short, of course. So, and I had to go in there and cover them because, and I got lucky. The market came off a limit for, 5 minutes literally, and then went back and up to limit, and then was up limit for the next 3 days. That was in the 87, I want to say 87, when the market crashed 500 points, and it's never crashed 500 points before. It was like, oh my God, the world is coming to an end. And anyway, so the market was up like 3 days in a row. So I had to go in there. Well, anyway, I'm digressing. So there's another time where I went and I traded at night, and then I got lucky, and because it's very thin, and I got lucky in a trade that I got into, and it was a total disaster, and I was able to get out of it, and said, well, I didn't lose money on it. I actually made a little bit, but it wasn't worth the risk. So I said, I'm not coming back here again, and I didn't. But I knew that this big trader was trading at night, and boy, I'm making this story go a lot longer than it should, but then again, I'm not trading right now, so that's what happened. I'm looking at the even area as some support. Keep your stops in place. We're almost to the point where we might have to go to 4 to 5 points on our stops here because of the added volatility, especially if the bond market here continues to rally. Anyway, so he's there. I know he's there all the time. So the war happened, and I was at a basketball game, and sure enough, he came to see his nephew or somebody play on the team that they were playing the team that we were playing that I was coaching on. Just so happens, and so I went up to him and I said, "Oh, Charlie, how did you end up doing on the night of the war?" And he said, "Well," and he pauses for a second and he goes, "Well, let's just put it this way." He goes, "It was the quickest $2 million I've ever lost." And why was that? And I said, "So what do you mean? What happened?" He goes, "Well," he goes, "there was 1,000 lot that was bid for, and it was bid for forever. And I just thought that, I'm going to sell it to him, and, I just scalp it and get out of a few because there was nothing going on." And he goes, "I sold it to him. And as soon as I sold it, like it was like clockwork, as soon as I sold it to him, the news came out that the war started, and the thing rallied 2 points and 1,000 lot on a bond market, and 1 point for each 1,000 lot on 1 point is $1 million. So he sold his 1,000 lots, and it's a lot to sell 1,000 lot at night. With low volume is a lot, right?
Yeah.
Sells 1,000 lot at night. Of course, it's going to take him. It took him 2 points to get out of it, And so basically, he goes, "Well, let's put it this way: it's the quickest $2 million I've ever lost." It's like, okay, so yeah, it will rally. Bond market will rally. S&Ps will break. Yeah.
Tell me something. I've heard you say this. The bond knows ahead of time.
Bonds do know usually, yes.
Okay. The question that I have for you is when you see this rise, is there a correlation that, okay, you're probably going to see the news in a day or so from whenever the bonds start their little move?
Yeah, but you don't get, look, it's not a perfect timing thing.
Yeah.
Right. You can use the bond market. Let's say you get into this. Let's say, for example, we get into this even area and we get a position, right? And it's ticking down a little bit more. You can look at the bond market and say, is the bond market, is it going to continue to rally, or is it coming off their highs? Are we like, it did that with the 11 area. The bond market, we got into the 11 area. I looked at the bond market. The bond market came off their highs. I was thinking, okay, well, as soon as the equities look at it, then maybe we'll rally a little bit. And that's exactly what happened. So you can maybe sneak, again, it's not a perfect situation.
Yeah.
Obviously, if it was that easy, everybody would be trading it. Right?
Yeah. No, I guess what I was asking was, like, we're seeing this push up, and usually the news comes out after we see the move.
Right. I mean, yes. The news is out. The news is out, but we don't have it.
Oh, okay. Well, my question is normally, when we hear about the news, will it be a day later, 2 days later?
No, it'll be 15 minutes later.
Okay.
Yeah. No. Goldman already has it.
Yeah.
Goldman is trading it. That's why you get the move. And then they say, all right, let's put it out. Let everybody know what's going on.
So we can sell ours when they're buying.
Yeah. So that the rest of the world. So we got our position. Now let the rest of the world come in there. So then we'll take our profits. That's why they never lost any money in 5 years of trading.
That's amazing.
That was the thing. They were, I don't know if that's always the case, but there was a case where back when I was on the floor, somebody said that Goldman hasn't lost any money trading any day in 5 years. They've made money every single day.
Well, that's what we're supposed to do.
Yeah. It just doesn't happen.
Just hadn't quite figured that one out yet.
Yeah. That's just too funny. Just tells you something.
Trade with Goldman.
Trade with Goldman. So it's very hard when you're standing next to the Goldman broker to trade with Goldman. Because if Goldman's buying, you have to sell it to him, right? So there was a little bit of a problem when I stood next to Goldman. I really did not want to take the other side of his trade. So every time I got into a Goldman trade, I quickly got out of them. Let's put it that way. I did not want to take the other side of a Goldman trade. I'll tell you that much. So if the broker would look at me and says, I'll buy 300 from you, I was getting out of them. I was getting out of them very, very fast. And that was like the beginning of trading, as we continued to slowly downtick here. That was at the beginning of trading on the screen and on the floor at the same time. And there was maybe 50-50. Man, at the beginning, it was 80-20. 80 in the pit, 20, and then it went to 50-50, and then slowly the numbers turned around. And so we went down to here. What we get down to 1.25. Of course, my order was at 1.
Mine was at 1.25, and I didn't get a fill.
Well, you didn't get a fill. I didn't get a fill. 56 traded down there. That's amazing. Mine was at 1, and I didn't get it. Huh. That's annoying. Well, we both got screwed on that one.
Yep. That was probably the low of the day.
No, I doubt it. Look at the bond markets on the highs. Little resistance if you're very aggressive around safer resistance is at 20. If you're very aggressive at 12. What was the question? What was the story that was?
I don't know. I'm
I know. I got distracted also by not getting filled there at 1. And you told me you got 1.25, and you didn't get filled. That's. I'm trying to remember the story I was telling. So I was standing next to the Goldman trade, and like I told you, I was always getting out of my trades quickly with them because I did not. Wasn't really. You don't want to really go against the other side. Not all the time. I mean, they're not always going to be right, but most of the time. So this guy, now, like I said, the percentages were, slowly getting to a point where you were getting more trades online than you were, in the pit. So I'm standing next to the broker, and he buys 100 lot from me, and I look at the screen, and there's 200 offered. So I tell my clerk, I go, buy me 100 on the screen because, there was not enough in the pit to do it. Like I said, the orders were slowly shifting to the screen. All of a sudden, the 300 is gone. And I'm like, I turn around to the broker, to the desk. And I go, really? You're going to buy the 100 from me in the pit and buy the 300 off the screen at the same time and not give me a chance to get out? Because he bought them all. He needed to buy 500. So he tells his broker to buy 200 in the pit. I buy 100. So I look on the screen. I said, buy me the 100, out of the 300. He buys them all at the same time, and I don't get any. And it's bid. And I turn around to the desk. I'm like, you can't really be serious. You really did that, did you? I knew who did it. So that was it. So once that started happening, I was like, you know what? I'm not trading any more size on the floor because these guys are going to screw me on the desk because they're going to take whatever's offered off the screen and I won't be able to get out. It makes sense to everybody? Do you understand that? So I was like, that was one of the last days that I traded on the floor when they were going to, when they were going to do that to me, where he's going to stick me with 100 lot and take the rest of it. I'm like, really? Really, you're going to do that? I didn't even bother going. I look at the broker. I just turned around to the desk, and I know the guy's at the desk, right? And I'm like, he goes, sorry. I'm like, okay. You're not going to have me around here anymore to do that.
About how long ago did they change the trading hours? Several months back, a year back?
What do you mean, the 315 thing?
Yeah, the 315, yeah.
Oh, it's only within the last couple of months.
Oh, okay.
Yeah, not too long ago. Maybe a little bit longer because the days go by fast, but not a year. Hasn't been a year. I was
sitting there watching that thing, and I'm going, this thing ought to be dead. I said, maybe they just had so many orders, they're trying to get the settlement out of it. Man, it kept trading.
Yeah.
And I says, we ought to touch that 65. And I'm sitting there holding that sucker. It done made me mad.
Yeah.
Then we're back up to 70 and I'm going, son of a gun. And then here it comes. It just, boom, there's 65. I'm going, that there was an order sitting at 65 and it would not move.
Mm-hmm.
I mean, it just, they knew something. So I said, if they know something, I know something. So I just sat there with them.
Yeah, no, those guys, sometimes when you put those orders in there, they're, unless they change their mind, they're not moving it.
Yeah.
They're just, some of these guys are just good. They just, I don't know how do you trade that size, but you do. So,
well, it wasn't a big order. It was only like about 160, but it didn't fluctuate. I saw some guys trying to front run it with 100, 150, something like that. But that 65 did not move. It sat there.
Yeah.
And I'm going, they know something. They'll come and get that order.
Yeah. Usually the case.
That's like this 04 and a quarter. They'll come and get it. It's been sitting there a while.
Yeah. All right, so we got down to 1. So now we have to be careful here around the even area. I would say, I can't believe we didn't get filled there, Don. I can't believe you didn't get filled.
I'm sitting here with egg on my face. I'm ticked.
I mean, I can't believe that is just like.
That just ruined my day.
We had a good day, but that would have been just icing on the cake because it rallied all the way up to 9. Well, I can't believe we didn't get filled. Oh, well. All right, let's move on. Just make the adjustment here because we're not going to definitely, I'm canceling my 01s here. That's out. I'm going to leave, let's see, probably leave the 99 in. See what happens. Maybe I'll leave even in too, but smaller number. All right. All right. Well, again, we talk about, if you make your money, you make your goals, and you've done all right this morning so far, then you're good to go. Then that's great.
I got a question for you that was asked of me the other day. How do you gain the confidence to trade these levels?
Well, I think the more you see them work, and the more you are familiar with why they're working, and you understand that we're not picking them up by happenstance, right? There's a logical reason why you and me both have the same level. Of course, I taught you, but that's another story. But you've always done your own thing, so I give you credit for that. You've just taken what I've taught you and expanded your horizons and your look at the market, and you've done it your own way, and it's kudos to you. But there's a reason that we are picking levels. We're not just like saying, oh, I like this area so the more you feel confident in the reasons that the market is stopping at an area, the more you find these areas and understand why they are an area, it should give you confidence in jumping in and getting in on those trades because you've seen them work before. You have the confidence in them working, and basically trading is confidence, right? I mean, if you know we're going to always take the loss, there's always going to be a loss, and you cannot be scared to lose money, and you cannot be scared to take a loss. Okay, and if you can handle those two concepts, then you will be able to get more confidence in finding the levels and understanding why they work, and then taking the trade. I mean, the blue band is an easy concept, and it's going to work sometimes. It's going to not work the other times, and you just have to keep your stops in place when they don't work, because they're going to work more times than not.
Yep,
that's about it. As long as you feel confident in doing what you're doing.
Trust me, I can tell you about the blue band. It has hammered me enough. It does. Let's put it this way. It's like a roadblock. When you get to it, you better get out because it usually bounces back against you.
At least for a little bit, give you a
Yeah.
scalping opportunity. Right. Not all the time, but but definitely a few times.
I don't know if you remember this or not, but when I first started, took the class, you had called and you had told me then, said, look, you'd asked me what I'd been doing and I told you. And you said, I'm not trying to take away what you have. I'm just trying to make you a better trader. And the essence that I took from it is just kind of look, don't throw out what's working for you. Use it, and use this too.
Right.
And you have done that. You truly have.
Right. I don't want to change anybody here.
Yeah.
I can't change anybody. The only thing we could do, everybody's got their own way of handling risk and looking at markets or looking at a chart. We just want to throw different ideas at you so we try to make sense of the charts. That's all we're trying to do.
Yeah.
And if we can understand why they bounce off of certain areas and we can take advantage of it, much the better for us. So that's what we try to do here.
I guess that's what I was trying to explain to him. I said, look, we all have a toolbox and, sometimes these tools work for a long while, then they don't work anymore.
Mm-hmm.
Put it back in the toolbox, get you another one.
Right. I mean, we adjust. The hardest thing,
yeah,
I think, for us right now these days is simply the adjustment for the risk. Because we don't ever know when there's going to be some volatility into the market and there's not. We never, with electronic trading and the fact that news around the world is instantaneous almost, that's where we lose out as a trader. Because that's the hardest part for us to manage. And that's the hardest part for us to deal with. And that's why I keep saying and always keep saying is make sure you put your stops in place, because that's the only thing that protects us against that unknown. And we have that big disadvantage because we're just not going to be privy to that information when it comes out. It's just not going to happen.
Back then, if we had a 30-point S&P day, that was a big day.
Oh, huge. They were trading in 10, 20-point ranges for the longest amount of time.
Yeah.
I mean, 30 points was a big day. I remember when in 2007, when the financial crisis was happening, you were getting 40-point moves down in the S&P overnight, and that was like huge. Like, oh my God. And now you're getting that in an hour.
Yeah, I was over in the Dow. We was dropping like 600 and 700 points, and everybody thought the world was ended.
Right.
Now we're down 450 points in the 8-minute.
Nobody says that. Right. Well, that's everybody's used to that now. Like yesterday, after this number came out, they went down here to 23 and rallied up to 76. So it was a 50 plus basis points in an hour. 50 plus points in an hour. So they definitely, the electronic trading has definitely added to volatility. And again, that is the only thing that we cannot have any voice over. That's the riskiest part of our job, is to be able to deal with the volatility. And the only way we can deal with it is making sure you keep your stops in place. And it doesn't necessarily always have to be 3 or 4 points. Sometimes it could be 6 because you kind of let something ride, but make sure you always get back and get your levels and your stops in place, because you just don't want to get caught in one of these big moves.
Yep.
Did I ever get caught on a limit up or limit down? When I was trading, there was, like I said, there was one time where I had a position on overnight, and my clerk called me up at night. This was before electronic trading, and he told me that I was short and the market was limit up. And he goes, you better, there's only one way I can get out of that. And basically I had to go on the floor and stand next to a couple brokers that I knew and tell them, look, I'm short. I just need to get out. I'm not trying to get long. I'm not trying to buy anything. I just need to get out. I go, so if you get an order for 1 lot or 2 lot or 3, maybe you can think of me. Because there was always, as the night goes on, people saying, all right, I'm just going to get out. It's limit up. I'm going to take my profit. So I put the word out to a few brokers that, look, I'm short. I just need to get out. Can you help me if the market comes off a limit or if you get an order to sell? Just so happened that the market came off a limit for literally 5 minutes and then locked back up in limit, and I was able to get out. On the screen, it's going to be a little bit different though. You're going to have to put the order in and hope. Again, the screen's different. They have different limitations. There are limits, but its limits are to lock the market closed for 10 or 15 minutes. It's not so much a limit where it doesn't reopen. So the market, it's a 5% limit and a 5% limit, which is crazy, by the way. 5% limit, and when the S&Ps are trading at, let's say, 4,500 is 220 points. 225 points. It's a crazy number, right? And so the next limit down or up would be at 7.5%. 7.5%. That's, so you're talking another 80, 100 points at that point. It's like these numbers are crazy. Again, because of where we're at with the 4,500 number, look at bond markets, we push the highs, they come flying off the lows, and S&Ps kind of pop up here a little bit. Very, very tricky, this little market. So yeah, I've gotten stuck once. I had to come down to the floor to get out, and it was a good thing I got out, because like I said, that was in 87 when the market was lock limit for the next 4 days. In the bond market, I used to have limits where something's up. The bonds came off, and all of a sudden the S&Ps rally here. So definitely. Okay, I did say that if you were aggressive there and you wanted to get short, 12 was the area, and got a nice quick little trade there. It's a good thing I put my order in there and I just saw that. All right. So that was a quick little scalp there. If you wanted to get short, we said 12 was, look at that. They just hiccuped there. They broke it, and now they're making new highs. See if the S&Ps follow through. So yeah, that was an 87 the bond. So you used to have the bond market had limits of 3 points every day. Now they don't have limits. Bonds don't have limits anymore. Again, it's percentages, not limits, not points. So it's crazy how that has changed. It's basically unlimited risk almost. They try to limit your risk with stops, with limit up and limit down days, but
It's just having a tough time getting past that 19 area up there. If we'd have got the 01s, we could have been through for today. I'm going to stick the levels again in the chat room for anybody that may have shown up late. They'll have at least some numbers to go by.
All right, so we got a little hiccup there in the bond market. Broke it, rallied it, then S&P is pushing here towards the lows. Again, we talked about a little resistance around the 12 area. Flew all the way up to 15 on the little hiccup and came right back down. If you were aggressive, I said the better resistance was up at 20. If you were aggressive, it was at 12. Again, everybody's got different. When I picked these areas, they were not, they're areas based on the work that we do, not, not guessing. So there was a reason for what I said. And if any of this stuff interests you and you like to learn, or like Don said, add to your toolbox, we do have an education course that talks about these different concepts and ideas that me and him are talking about. And we can teach you, because the goal of the course here is to make sure you can find these areas and trade them on your own versus having to listen to me or Don every time we were around, or Mark whenever he shows up.
Yeah. I tell you what,
right.
When he shows up, we'll leave.
Yeah,
Leave him
yeah. Give him everything to deal with it myself. All right, so bonds continue to lead the way. I think they hiccup there, and we hiccuped as well. Let's see how the correlation there met very nicely. It's hard to take advantage of it though, because you have to have your orders in place, because it was there for a second and came off. And now be careful here at the 01. As you can see, it's coming down here. Again, if you're risk averse, you're not doing the 01 at all, or the even area at all now. You're looking more at 92. Okay, if you're risk averse, if you're a little bit more into risk taking, then you're maybe looking around the 99 area, even 98. And remember, because of this extra volatility, you probably have to look at 4 to 5 points on our stops and our entry points at this point. That's what we have to adjust here a little bit, especially if we continue to go down. Market volatility, the VIX definitely increases as the market goes down.
Got a 27 handle on the VIX.
27 handle. I think yesterday was at 25. It probably went up to probably in the low 20s on the rally yesterday afternoon, or even overnight, even, because they kind of held their own pretty much overnight. But yeah, so we'll see. See what happens. Be patient, careful, keep your stops in place. That's all we can do. As we are on the brink of another possible, I don't know about but definitely situation in Russia there with the Ukraine is causing some volatility here.
I can't imagine why anybody that runs a country that has as many problems as any country does wants another one to have more problems. It's kind of like,
yeah, I mean, I don't understand it, because I don't know. Like I said, he doesn't have really a big. I don't know. Their economy is not that strong.
yeah.
But
you think it's old at your house?
Yeah, right.
Living over there,
right? Yeah, I mean, he has to think that he's not going to get. Nobody's going to buy his oil. I mean, unless he made a deal with the Chinese, they're going to buy the oil from him. Maybe they're going to fund him. I don't know. It's a very weird situation, but it is what it is.
It's an interesting little setup in here. I guess we're going to get to see what happens at 10.
Yeah, the 10 could, the 22 is total resistance.
I sure miss my old one down there. Man,
Yeah, we have to forget about that one.
I'll kick myself for a day or two. Let's put it this way: I will remember the old one.
Until tomorrow. You'll forget it by tomorrow.
Oh no.
You'll miss another trade tomorrow. Don't worry. Well, that one hurts though, because you actually traded. I had the one. I didn't never got. You had 1.25 and you didn't get filled. So that has got to be worse.
No,
That has got to be
bad.
worse.
I figured it'd touch one.
I've been missing it. I've been missing everything by a point, so I put it up there. I guess. I mean, I've been getting filled at a point, and I've been happy. But again, we're not perfect, so we just have to move on.
Well, I readjusted my numbers to where I would be more in sync with where the market was going, or where it would truly bounce, where I could get filled at. Let's put it that way.
Okay.
And
right, because I take the safer entry point,
yeah,
or safer level, and that's why we suggest scaling in, because we're not going to be perfect.
But all the levels, I should say, all the levels, they're bouncing anywhere from 3 to 9 points.
Yeah, I mean, we're getting good bounces off them. That's for sure. If anybody has any questions, feel free to ask in the chat box. We don't mind questions. As you can see, we answer them.
And there's that blue band coming down. It's coming to haunt me. Why is it everywhere I want to go going to be on the other side of that thing? It's kind of like driving down a highway, and the highway's clear, and you get down the road a few miles, and somebody's done thrown a roadblock up there.
Mm-hmm.
Somebody told me one time, says, yep, if you want to be a carpenter, you got to have a hammer and a saw.
Yep.
But I'll tell you what, if you're doing the analysis and stuff like that, you'll look over and say, well, you can do calculations and everything else, and the number will pop out, and you look over and there's the blue band already sitting there. It's kind of like, these calculations are about worthless. Let the blue band do it.
Yep, that's right. I mean, if we have something that can do it for us, so why not let it do the work?
When you think about it, you come in here and really and truly, you got a chart. And I was telling them the other day, I says, I have the Bollinger Bands on my chart, except I don't know how to use them. So them little red lines, they just get in my way. So I changed them to the color to white, so you can't see them except for the blue line.
There you go.
I says, if I can't get any benefit out of it, why clutter it up your chart?
If I'm not mistaken, you have a lot of lines on your chart.
Well, I've put a lot of areas in there that are about 10 points apart. And I'm just, they're quick references. I can look over there because your mind, you trained to be an accountant, so you have a head for numbers. You can probably remember 8 or 10 numbers. I look at it, look away, and I can't remember it. Mm-hmm. So I have to have reference points for me. And, but really and truly, basically my charts are just like yours, except I'm running on-chain channel instead of a Bollinger Band, but the Bollinger Band's there. They're just in white. It'd be great if I knew how to use them, if there was some benefit.
Yeah.
And then you think, why do I need all of that? Price action is, I'm ahead of the game.
Right.
And so it's kind of like, I don't care anymore. It's kind of like I walk in, and the more you do this, the more you learn that, look, I don't need that. I don't need this. I don't need a lot of things.
Right. Exactly. We try to make it as simple as possible around here.
Yeah.
Less things to look at. I mean, definitely take. I don't understand how some people have 5 or 6 charts up there. You can only look at one chart on one screen, 5 or 6 screens up there. You can only look at one screen at a time. So
yeah. I think about your big screens. I'm going, I'd kind of like to have some bigger screens.
yeah, well, that's, I don't know. I can't. If I had a bigger screen, all I do is like put more information on it, because why would I need 2 screens then?
Yeah.
But then again, I clutter it. I guess I don't know. 2 screens is enough for me. Let's leave it at that.
Well, really and truly, 2 screens would be enough for me, except on my third one, I keep your charts up. I don't use your charts because I don't have time to look. And not only that is I can't get over there and put a cursor on it and tell exactly where it's at.
Mm-hmm, mm-hmm.
And so I can do that to mine. So
yeah,
you like your bars all black?
I do. Yeah. It's just easier for me
to see it.
Yeah. I am colorblind, so
yeah,
keeping it black and white, I can see.
Yeah. Some people, they use a black background and red and green bars on it. I can't see them good.
Oh my God, that would drive me crazy.
And but I can look over yours, and if I knew the exact level, had a cursor over there, I could say, oh yeah, I can just see all of this. You keep yours squeezed up. And
I don't think I keep it squeezed. What do you mean squeezed up?
Well, from left to right, you compress it together.
Right, I can make it this way.
I'm talking about wider apart. And you spread it out.
Oh, okay. Like like this.
Yeah, like that.
Uh-huh.
And see, now when I'm trading on my 5-minute, that's basically where I'm at. So I can see my openings, I can see the tops and the bottoms, the whole 9 yards. But if I'm looking at levels and I want to see something, I squeeze it together, kind of like what you had yours.
Mm-hmm. Okay, I get it. I just do it to put in more so I can see more bars.
Yeah.
Yeah, well, we've gotten a little bit of a range here. Bonds are still on their highs. Again, if you've done well this morning, and if you saw our levels there, you saw that our levels have worked very nicely. Definitely have to be careful around the 44 even area. Now that we've gone there twice and got down to 01 and then 02 and then popped back up. So the even area right now is very, very tricky and very, very, I would say, very risky compared to what it was, I don't know, half an hour ago when it went down there really fast. But then again, it's just gotten into this range here and hasn't moved. So tricky little situation to have to consider. But we have to see what happens. I think we get above 27 or 30. I think we go retest the higher levels, at least go back to our pivot there. And the downside here, we get below even. We have those levels on the downside that we have to go retest. Maybe we'll go 92 would be our next level. We gave you those levels that you have to focus in on. Again, we get a little range bound here. There's not much to do. It's hard to keep talking. As you can imagine, it'd be much easier if we were moving around and having something to talk about as far as trades are concerned. But it gets, bonds are keeping this market on the downside. You can see they're up on the highs here, and they're not moving. And I think it's just going to put pressure on these S&Ps. But if you're looking for a short, just understand where your stop should be, and trade it accordingly. There's no reason not to get short if you want to get short, but just make sure you know where your exit strategy is. For me, I'd rather stay out of this range-bound trade here. We could easily uptick. They could hit some stops to the upside. They could definitely continue to go down. It would be a guess one way or the other at this point. So for me, I would rather just wait and see where the market's going to go next before I get involved. Like I said, resistance right now, still around the 20, 21 area. We get above 30. I think we have rotation back up, at least to the pivot, and then we'll see what it wants to do from there. Downside, we have our levels on the downside. Really tough little trade right now. We just don't know which way the market's going, as obviously there's definitely issues with the Russia situation, how everybody's perceiving it. Again, the market is also going to perceive it one way. Right now, I think the bond market is telling you that they're going to go in. That's all I would have to say with the way the bond market's trading, especially under the pressure of the Fed raising rates. To have a bond market rally, and the teeth of that is telling you something. So we'll see what happens. Again, if anybody has any questions, good time to ask.
It's going to be interesting to see how it works around that blue band and see what the bonds do.
Well, the bonds, again, they're on their highs. We're range bound here a little bit. So if you're going to get short here, anything above, 24 would be out of any shorts.
Basically, you trade the bonds just like you do the E-minis areas.
I'm sorry, what was that?
I said, basically, do you trade the bonds basically like you do the E-minis, just as areas?
Yeah, well, again, the bond market has become more one-way trade than anything else. It's been very tough to trade that market. If you just look at the technical aspects of it, you can find kind of the same concepts that we use in the S&Ps to help you find the areas in the bond market to trade. It used to trade really well technically, meaning it used to bounce off of levels really nicely and give us opportunities to scalp. But since the government got involved with all the buybacks and all the fancy quantitative easing and how they got involved in the market, that's kind of taken the technical aspect out of it. It doesn't trade well technically anymore, so we kind of stay away from it. But if you were looking as far as stops, where your exit strategies would be, where your entry points would be, if you look at the technical analysis that we do in the S&Ps, you could probably kind of look at the same areas in the bond market as well.
Would you look at that in the bond, looking at the bond chart, would you use the 1503 area?
15, it's 152. So
yeah, 152.03, somewhere in there.
Oh, support on the downside, you mean?
Yeah.
Well, the problem is you have this triple bottom here.
Yeah.
So we crashed through there, and you're below the blue band, would probably bring us back down to this area here.
Okay.
50.31, and then but you got this nice triple bottom here that's holding the market up.
Yeah.
That definitely would probably, if we get below it by 2-3 ticks, we get below 2, probably again. But then you have a nice top here.
Yeah.
It could hold it. So definitely, I would say the safer bet, if we traded here below 31, maybe we trade a little bit lower.
Yeah. Okay.
Yeah, but they do that a lot, where they find these. Again, here there's a little bit of a buy, right? a little bit of a sale here. I mean, I would look for a little bit of a sale here, but then you have this double top, triple top.
Yeah.
So it becomes a, but yeah, I mean, it's look, and they do this all the time. They flush it down and they rotate it back up like crazy.
Yeah.
And they held the blue band here pretty nicely. So it does certain things that we see in the S&Ps. So
Yeah.
But the only difference is this: each point here, well,
is $1,000.
a point is from 152 to 153. Each tick is 31 and a quarter.
Yeah.
I mean, it doesn't move as much, but still, if you're wrong, if you're looking for, if you got 250 is 8 points. Yeah, 4 points is 120. 4 ticks is $125. So I mean, the thing is, you got to give yourself 3 ticks of heat, 4 ticks of heat. So it's a tough little trade there. I mean, it used to be a great trade, and and you have to increase your size because it doesn't move that much. Now you're talking about 31 and a quarter for each contract you put on. If you put on 5 contracts, $150, and roughly it could cost you.
Yeah. A question for you. Out of the 3 markets, the ES, NASDAQ, and the E-mini Dow, which one trades technically better?
E-mini Dow. Well, again, because I'm biased here, I'm going to stick with the Dow trades close to the S&Ps, except for the fact it's the Dow, so it's taking a look at the bigger picture, the number, the 36,000 number.
Yeah.
The S&Ps basically are looking at the 500 stocks. So there's a difference there, and sometimes you get 90% of the time they will trade in unison.
Yeah.
If you're looking at the Dow futures, they will trade in unison with S&Ps. Then there's always that 10% chance that because of the discrepancy, because of the value, it's not going to trade the same.
Yeah.
Because sometimes you're going to get more, other stocks that are going to be affected that are not in the S&P 500 that are going to move the market. So as you can see here, bonds breaking down here a little bit. Again, they got below that double bottom, they broke. So they kind of do the same thing. You just have to, believe in it.
Yeah.
But and the S&Ps on these highs here.
The reason I asked that was, every now and then you'll be looking at a pattern coming out of an S&P or the E-mini trade, and you say, the pattern should go to number X. Well, it gets like the L1, it got close, but it stopped short. And I'm going, well, we're going to get filled. We're going to get filled. That's a good. And then it doesn't get filled. It backs off of it, and here we go. We're off and running. And I'm going. Then you flip over to the NASDAQ, same pattern. It got filled. But I'm going, okay, does the NASDAQ technically trade better to these points?
Look, you did exactly what you're supposed to do, and you picked the perfect situation.
Yeah.
The fact that you didn't get filled, not our fault. You keep doing that 100 times, you'll get filled 90% of it, 90 times out of 100.
Yeah.
Right. The fact that we missed this one and it's 10 points higher, okay, happens. You're going to get that trade where you're going to have the exact perfect fill. So what you got to take out of it is that at least you were right.
Yeah.
Not the fact that you didn't get filled and you're whining about it for the last half hour.
Me, I'd bitch if I was hung with a new rope. So,
I mean, you're literally whining about it for the last half hour. I mean, you have a little bit more reason than me to get one, but I've missed so many of those.
Yeah.
I've been right there. The worst part is when you're trying to get out.
Yeah.
Right. and you're trying to take a loss and you have the order in there and it does exactly what it just did. And you go from, oh my God, I almost got away from, I almost got away with it. And then all of a sudden now, I'm back in the hole again.
Yeah.
That's the worst when you're not this one. There's nothing lost here.
Yeah.
It's just the fact that you keep talking about it for 45 minutes and expelling a lot of oxygen. Otherwise, the worst part is when you have the order in and you're trying to exit a trade to take a loss or to take a little bit of a profit, and it goes and doesn't get you filled, and all of a sudden you're like, oh my God, I have to take a loss on this now. And now those are the ones that hurt. Those are the ones that I can't handle. The fact that I didn't get filled, okay, that's going to happen, but I didn't lose anything.
Yeah.
The ones that I'm supposed to get filled on because I'm trying to get exit out of a trade, whether it's we take a profit or cut my losses or something, and it doesn't get filled, then that's the one that I think about the worst. And
Yeah.
those are the ones that bother me more than anything. This one, I'm happy because I know I had the right area.
Yeah.
For sure, Carl. We all have the same problems. That's why we're doing this. I'm trying to share my experiences so you don't get into the same problems that I've gotten myself into. Whatever problems that you've gotten into, I have gotten into 10 times over. Me and Don.
And I'm still doing them. That's the bad part.
Yeah, well, we all still do them. You just have to do them less because you just hopefully stick to some rules and guidelines. So that's all we're trying to do. Happens. This is trading. Whatever situation you've gotten into, I'm sure I've gotten into. I could probably relate. So,
I would be better off if I just didn't, I'm long, I'm short, I'm long, I'm short. And then after a while, then everything gets crossed up, the signals get crossed up, and you're short when you should have been long. And that's when it comes to bite you if you don't get out.
Well, that's when you know you got to take a break.
Yeah.
A band camp. Okay, I can't relate to that one. Sorry, there, Bernard. Yeah,
I saw the movie Bernard once at band camp.
All right. Looks like it's trying. I think it's kind of keeping an eye out there on the S&Ps. Trying to uptick here a little bit. The blue band got hit initially like 3 bands ago and rotated off. We get above, like I said, we get above the 30 area. We could go retest the pivot and maybe those levels above. All right, there, Don. We're going to call it here for the day. Hopefully you guys did well today. Just be patient. There's a lot of uncertainty out there. If we made a little bit of money this morning, again, there's a lot less traders now, a lot less volume, a lot less volatility. The trade dynamics become a little bit different than they were just a couple hours ago. So keep that in mind if you're going to keep trading going forward. And if there's something news that comes out, especially as the day goes on, it's going to affect the market and less volatility and more movement. Keep your stops in place. I think if we start going to the downside, definitely have to keep your stops at 4 to 5 points. If we start rotating up, probably tighten up those stops to about 3 points. I would say, and then we'll see what happens from there. So market's a little bit, bonds are coming off here a little bit, especially if they kind of trade here, come down. S&Ps, you can see they're definitely reacting. They're acting together. They almost, if you look at those charts, they almost look the same inversely. The bond market and the S&Ps, right? They're inversely looking the same. So be a little bit, watch the bond market to see what's going to happen if you're trying to be short or long and kind of get you out. But I wouldn't really focus on it too much. If you made a little bit of money this morning, again, there's a lot of uncertainty in this market. Anybody at any moment could say something that could create some crazy volatility, and then there'll be more opportunity at that point. So, all right. All right, Don, thanks again for jumping
You're
in.
welcome.
And we'll talk to everybody tomorrow. Tomorrow's Friday, so you're definitely going to be in tomorrow with me.
Yep.
All right.
Is Mark
Right.
showing up?
I don't know. I have to give him a call and see what's going on. He's always on some kind of vacation lately. Took the kids to Disney World, and then he was going to take them to some beach. I don't know. I don't know what he's doing. He's busy guy. All right. We'll talk to everybody tomorrow.
Okay. Take care.
Take it easy.